Hello, everyone. Good afternoon, and welcome to this weekend's gold market analysis. Before last week even began, tensions between Iran and Israel were already eating up, and that gave traders a strong reason to expect gold to keep pushing higher. In fact, prior to the beginning of last week's trading session, price was sitting above our key level, which we identified at the 3,400 area, as you can see here. And the overall sentiment was clearly tilted in favor of more upside. But if you remember, I mentioned that we could first see some sellers step in to push price a little bit lower, what we usually call a healthy pullback before any major bullish momentum kicks in. So why does that happen, and why did I expected this? Well, there is a psychological reason behind this, and the way I see it is this. You see, the big players, I mean those who really move the market, don't usually buy into highs. They are not chasing price. What they are after is liquidity. So what they do is this: they shake up the tree a little bit, drive prices lower on purpose, trigger panic among early buyers, grab their long position at better price, and then go for the real move. It's something like clearing the path before taking off for a big run. And that's exactly what seems to be unfolding at this critical juncture. If you look at the chart here, you'll see that when price tested the 3,451 during the early hours of last week, we saw price drop down back into the key level. We saw a little bit of consolidation as despite poor US economic figures last week, the US gained momentum as we saw price drop into the $3,345 area during the second half of last week. And as soon as price got into the 3,345, we saw how it became difficult for sellers to continue that downtrend move. Now, as we head into the new week with weaker US retail sales and the Federal Reserve keeping interest rates steady at 4.25 to 4.5%, the big question is, has this pullback played out completely, or is there still some downside left before we see the real bullish move? Or let me say the bullish momentum. This is where the anticipation of the upcoming US economic events comes in. We've got the June PMI report, which comes in form of the manufacturing and services PMI, which is coming in on Monday, as you can see here. Then on Tuesday, we have the Fed chairman's testifying before the U.S. House Financial Services Committee. Then on Thursday, we have the gross domestic product annualized for quarter one coming in. And on Friday, we have the core PC inflation data all lined up. And on top of that, we are now seeing new escalations in the Middle East as the United States has been reportedly said to have joined the strikes on Iran. So, how is the market processing all of this? In this video, I will walk you through how these fundamentals are showing up on the chart, the key technical zones I'm watching, what price action is telling us about the current market psychology, and how you can position yourself smartly for the week ahead. Now, before we dive into the details, please take this as a quick reminder. Everything I share here is based on my personal chart analysis. It's not financial advice, so as always, trade responsibly. Now, with that said, let's get right into the chart. So my first point of contact would be on the 4 hours time frame, as you can see here. And what I did was to take into account the character of price action since the month of February of this year, and it is quite obvious at first glance that the price had consistently found higher highs and higher lows before it tested that all-time record high we saw here at the $3,500 zone. Now, after connecting the series of higher lows, as you can see here, we have multiple ascending trend lines to work with. But the pink one you see on my screen right now is my major trend line for this week, as you can see here. And of course, if we fast forward to the mid month of May, we saw how this trend line had continued to support higher lows. As you can see here, we saw a higher low here in May, higher low here in early June, and of course, we can see price is almost close to that trend line again from last week's trading session. And of course, you know how we use our ascending trend lines. As long as price remains above them, we shall continue to look out for patterns and structures that support buying ideas. Then, besides the trend line, is my key level going into the new week, which is duly situated at the $3,350 area. Remember, this level here had been a very important factor in determining whether buyers or sellers are dictating the pace. You can see since the month of April, this level here at some point in time had been a strong resistance line. Then at some point, it was a strong support line. But the most important focus here is what this key level is doing in the last 2 weeks. So one thing you'll notice here is that since price broke out of this key level about 2 weeks ago, we can see that despite the strong bearish move from last week, that area was unable to be broken by the sellers, making it a robust demand zone. And as a result of this, I identify this area as a temporary demand zone, at least until we see sellers break through the structure, of course. But as long as price still remains above this area, I want to be maintaining a bullish bias. So as it is right now, and then in addition to this, that reminds me, we have a descending trend line which was also broken. So we have a descending trend line here. We saw price broke out of that descending trend line 2 weeks ago, and it appears price comes back to retest the structure. And from a theoretical understanding, it is expected that when price breaks out of a key structure like this, it at some point in time will come back, retest the structure in an attempt to continue the uptrend move. So you can see we are at a critical juncture at the moment where price continues to maintain buy pressure above the key level, above the ascending trend line, and of course finding a demand zone within that range around the 3,350 area. So for me, next week, I want to be maintaining a bullish bias, and I will continue to look out for buying ideas around this area. And if price continues to climb, break out the 3,370, I'm looking to buy more and then hope that price will get to as far as the 3,450 area, if not breaking it. But if at any point in time next week we see that buyers are losing momentum and we see a situation where the demand zone is breached, broken to the downside, even breaking down that ascending trend line, this could trigger selling ideas like a retest of structure to incite a move, maybe back into that ascending trend line we have here. So we can see we are at a critical juncture at this point in time where, depending on how price reacts to this key level at the beginning of next week, will determine whether we are going to be holding on to a bullish or bearish bias. But trust me, I will be with you in the comment section of this video at the beginning of the week after monitoring the character of price action around this area to give you an update on what my plans are. So there you have it, my in-depth look at the XAUUSD for the week ahead. If this video helped with your independent decisions, give it a thumbs up and drop a comment below. Of course, I want to know how you are approaching this market next week. And don't forget to subscribe for more analysis like this. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.